We are live.
Hey.
Hello, everyone.
Hey.
We have got a great show planned today, because when we started to get our financial act together, it was really, really important that we understood not only what was in our 401k, but what else we could be doing to grow our wealth vis-a-vis the stock market.
Yeah, and we really had to educate ourselves.
Yep.
About the stock market and different things, finding different material to read and understand and have conversations with smart people.
Well, definitely, especially considering what's going on now, right, in the stock market. If we didn't have the education we had, we might be panicking right now with the turbulence in the stock market.
Yeah.
And we think about GameStop and all this other stuff. What do we wish we knew before we started investing outside of the 401k?
So, you see, she's better after missing Thursday. She's back. She's 100%, right?
Thank you, y'all, for all the good wishes.
All the good wishes.
No, not 100%. I'm at 90%.
Okay, 90%. My bad. And you guys asked us to bring this special person back. And we did. She agreed. And we're going to have her as our special guest. I'm not going to say who until we get into it. But first, we're going to introduce ourselves.
So for those of you who don't know, my name is Halisi.
And I'm Rick. Welcome to our Black Utopia.
On our channel, we talk about money, travel, and retiring abroad as we build generational wealth. We help Black folks who are getting close to retirement age get their money straight.
Yes.
So they can retire on time. Or maybe even early.
Maybe early.
Right? Yes. So for those of you who don't know, gosh, about 6.5 years ago now, Rick and I got a wake-up call. We were getting close to retirement age. We looked at our bank account and it looked crazy.
Crazy.
But we did get our financial act together, thank God. And we went from negative 22,000 to over 1 million in net worth in about 3.5 years. So if any of that sounds interesting to you, please, about 50% of you who are watching are not subscribed to our channel. Why is that? Subscribe.
Maybe we need to have the big subscribe banner just bouncing across the screen.
Definitely subscribe. Hit that notification bell so that you know every single time that we drop a new video. And if you find this information helpful, then hit that like button. So without further ado, we are going to introduce the lady who taught me what I know about investing. About 3 years ago, 3.5 years ago or so. It was early on in the pandemic. This woman, who is also my stepmother, came to an event, and afterwards she said, "So, Halisi, are you investing?" I was like, "Okay, where'd that come from?" And the answer was, outside of 401k, no, I was not. She's like, "You need to be investing." And I was like, "Okay, what don't I know?" I didn't know anything, y'all. I didn't think that I knew anything, but I really did not know anything. And thank God we have been meeting every other week ever since then. And she is one of the reasons that we are retired today.
Yeah.
Right?
Big part.
So without further ado, Phyllis, how are you? Welcome back.
Welcome back.
I'm good. Thank you. It's a pleasure to be here.
Yes.
Talking about something I love to talk to people about and encourage them to consider and look seriously at investing in the stock market.
Yeah. So we're going to get right to it. And then, let's get to some hellos right quick. We're going to get to some hellos because some people have been waiting since 8:02 for you. So happy Palm Sunday, Alexandria, Action VJ. Yes. Hit that like button as y'all roll in. Thank you. Hola, everyone. Hey, Auntie Trey.
Auntie Trey, hello.
Kelly, good to see you. Meriton Martin, good to see you. Hey, Vanessa. Where's Vanessa? There she is. Happy Sunday. Hey, Holly. Hopefully you got my email. I know I messaged you. Hey, Greta, good to see you. Hey, Venus. Rhonda, we know who your favorites are. Hey, Greta.
Well, see, Greta had to did you have to turn your air conditioner on or open your windows because it was warm?
I thought it was a snowstorm back there.
Yeah, everybody said that to her in the comments. I thought it was just snow.
Yeah, so she's in Upper New York. For those who don't know, maybe we shouldn't be telling her business. Hey, Curtis, good to see you from Ann Arbor, Michigan. Is it cold or is there a heat wave going on? I don't know. It was hot here today. Definitely. Hey, Gami, good to see you. Shauna, good to see you in the chat. Michelle, Winnie B, Karen Louise, good to see you. Glad you made it today. Hey, Olivia. Cool. Oh, I didn't notice that. Oh, hey, Vicky, good to see you. Happy Sunday to you too, KB. 777777777 ballas.
Hey, Penny and June.
Hey, Penny and June. Good to see you guys in the chat. We missed you guys last night. You weren't there at the happy hour. Hey, Christy. A purple tulip. New name. Welcome.
Pretty flower.
Yeah, it's a new name, right? Hey, BP, good to see you. All right, everyone, we're getting Professor, good to see you. Hello, everyone. We are so happy that you're here, and we're going to get right to it. You guys know how we roll. If you have a question, put a Q in front of it so that I can tell the questions and be able to make sure that we answer all of those. Okay, so let me get to our questions. We're going to start with our questions first, and then we'll get to y'all's questions. All right, so the first question really has to do with what we titled this because, there are bank failures and stock market is very, very turbulent right now. I was just talking to my friend who works for a company that's traded on the stock market. And just in this last 12 months, their stock went from plus $20 to like $7. Ouch. So is it undervalued? I don't know. But I told him, I was like, let me go into better investing and do my little stuff and see what's happening with your company. See if I need to invest. Because I do know that they have tangible assets, right? It's not like ideas and stuff. They invest in tangible assets. So there is at least that. But anyway, so with bank failures and the turbulent market, should we still be investing in the stock market today?
Well, the short answer is yes. Over time, the stock market has demonstrated that it's pretty stable. There are times that it goes up and there are times that it goes down. And usually it goes down because it's due for a correction, because it's been overly exuberant, because especially during the pandemic when people were sitting at home watching television and the stock market started going up after the dip, a lot of young people a lot of people, I shouldn't say young people, who hadn't been invested, got really excited about all the stocks that went up like crazy and wanted to get in. But then those are the ones that got hurt because they got in when the stock wasn't really worth what they were paying for it. Yes. I am a true believer in investing in the stock market. But before you invest in the stock market, there's things that you should do. And one is invest in your retirement plan, your 401k. If there's a match, you should always meet the match. If you don't meet the match, you're leaving money on the table. The other thing is that if you have credit card debt, you shouldn't be investing in the stock. I will say you shouldn't be, but it's not a good idea to invest in the stock market because if you're paying 17 or 29% interest for things that you bought and you're earning 10% on the stock market, you're not really making any money. So the first thing you should do is pay off your credit cards and not make any more debt with credit cards. And so you're saving a little bit and you're paying down all your debt before you start investing. So what I did was pay down all my credit cards and then I started investing.
That's good. That's good advice because debt will keep you enslaved. Especially uncollateralized debt, right?
Right. The other thing you do is don't spend more than you can pay every month. So if you make a credit card charge and you want the benefit of those miles,
right,
pay it off every month and don't spend more than you can pay off. And then you get the benefit of the miles, but you don't have the interest payments.
Exactly. And that's what Rick and I do. And for those of you who are afraid to get back into negative habits, as we were saying, an idea is you're out there, you buy your groceries or what have you, you charge it so you can get the miles, you come home, you transfer the money and pay it right there. or pay it once a week. That way you don't get to the end of the month and go, oh, I spent that much, right? And then get
Right.
back into the old habit of paying on time.
That's a great idea.
Yeah.
Yeah. And then you get the miles, but you don't have the interest. So, um, so what do you know now that you wish you had known before you started investing?
I wish I'd known everything. Uh, one of the things you realize the more you learn is that the way you think about money is the way your parents think about money, the way you were socialized to think about money. And just talking to other people who think differently about money, you realize that there are other ways to think. So, one of the first things you should do is read and get a good reading list so you can begin to think differently. The other thing you have to do is get comfortable with talking about investing, building wealth, and growing your money. It's not an embarrassment. It shouldn't be uncomfortable to want to be successful. You really can't. Some people can, but it's very rare to be able to get enough increases in your career to build wealth. You have to do two. You have to make money, but you also have to save and invest money.
Hmm.
You just can't. I mean, yeah, they're the stories in the paper, the person who goes from 100,000 to 200,000 to 300,000 salaries, but that's like rare.
That's
That's
really
not the
rare.
average person. Um, when I began to think about investment clubs were growing in vogue, if you will. And there was a little group of ladies called the Beardtown Lady, and they kind of made it popular to get into a club. Well, later on, I discovered a group called Better Investing. And Better Investing, you don't invest with Better Investing, but it is a nonprofit organization that gives you the tools to learn how to invest. Because talking to your friends or talking to your hairdresser or talking to, while you're doing exercises at the gym and getting a stock tip is not the way to invest in the stock market.
No.
Better Investing, I highly recommend to look at the tools that they provide. And it's a well developed website. It actually has been around for 70 plus years, which, when you look at this thing, started in 1951
Wow.
with people. A man decided that everyday people could invest in the stock market if he showed them how to do it. So, over those 70 years, they have developed these tools to help you. In the early days, they used to do it with pen and paper. In fact, when I first started, you do it with paper. I was after the slide rule phase because at one point they were doing it with slide rules.
Oh my.
Yeah. And it would take them hours and hours and hours to do a stock study. So to find a stock wasn't good based on all the work they'd put in it, people were hesitating. No, they had invested so much. Now it's easy. The tools are online. And there are lots and lots of videos to help you learn their methodology. And I'm a big, big, big proponent of taking a look at their website. That's what I use.
Yeah.
Hmm.
Yeah. And for those of you who are in the Beyond the Bling program, Money Mindset Makeover for Financial Independence, we do show you a bit of behind the scenes of better investing and the tools that are available. So if you want to sign up, the information is below. But you said something, Phyllis, that, and then I'll let you ask the next question that I want to follow up on. And did you ever have an issue with the notion that a lot of us learn about, to want to be wealthy is to be greedy, or
Oh,
money is the root of
absolutely.
all evil, or just all of that kind of negative talk about money? And if so, how did you reconcile that?
Well, my personal story is I remember my parents fighting about money. And I have a feeling that happens in a lot of families where you have
Yeah.
couples who have different ideas about how you should spend your money. So a lot of childhood memories are tied up in disagreements about parents having different ideas about what to do with money. Um, when I was living in Atlanta in the early 90s, I joined a group of women who went to school with my children. And that was right when Susie Orman wrote her first book. I can't even think of the name of it right now, but it was her very first book. And one of the things she said in that book was, you need to figure out what your relationship is with money and where that your idea about money came from. And I really gave that a lot of thought and reflected on this push pull and, the whole struggle at home and the parents fighting. And I realized that wanting to earn money and grow money wasn't a bad word. It wasn't a bad concept. It's not a dirty word.
Yeah. Yeah. And wanting to be financially free is not greed.
Right.
Because I heard only greedy people,
It's a part of our culture.
Right.
Yeah, it really is. It really is.
And I
100%.
wonder where we got that idea from. Somebody will think about that. It's like,
I think it's fruit of the slavery tree, if you ask me. Like if you want to keep a certain group of people down, then over moralize something and something that should be good or something that is innocuous and put an evil bent on it, right? And so then you keep people in poverty.
yeah.
And maybe not as a racial thing, maybe as a class thing, because I know plenty of white folks who have that idea as well.
Yeah, it probably could be. Who knows?
Yeah.
But anyway, you need to get rid of it.
Definitely.
Exactly.
Free yourself of that concept.
So the next question is, what questions should we ask ourselves before choosing where to put our money in our retirement accounts?
You need to figure out your plan and realize that your cost of living has a lot to do with how much money you will need in retirement.
Right.
Like where you want to live, how much money you want to pay for rent, how much money your overhead is, etc. So I don't ever recommend anybody just manage their own investments. I think it's good to have a 401 and then you have a cash account that you manage and enjoy managing. And once you start learning how to invest, and I'm sure Rick and Halisi had this experience, once you see the rewards of investing and the decisions that you've made, you're even more willing to make sacrifices and put money into this pot to watch it grow. I mean, it gets to be very exciting. So just think if you started that at 25 years old or 30 years old, or, instead of at 50, when the timeline is much shorter. And that's the other thing I learned is by the time we look around and figure, oh man, I need to start planning for retirement, you're like 50, 55 years old, and the window is short. And your earning increases, you're really in many ways plateauing and you don't even know it.
Yep.
And you're not going to get those big leaps in salary. So just think if you had started investing, in your 30s. So I recommend do it as soon as possible and try to get younger people interested. I mean, that's one of the reasons I like talking about it. Halisi, out of all of my children, is the only one who listened. Well, others are listening. They still don't feel as if they're in a position to invest. But even if you're investing $10, the other thing that Better Investing does is they recommend the club strategy, which means a group of friends get together, form a club, put your money together, and invest as a group. And the beauty of that is that you learn from each other. You learn, you share ideas. One person reads one book, another person reads another book. You come together, you look at the facts and figures that you've put together and compare notes, and then you decide as a group, let's buy this stock, let's buy that stock. And if there are clubs that have been formed over 30 years and they've earned millions of dollars by putting their money together and growing their money together.
And so in those, when people form clubs, does there have to be some kind of legal entity behind it?
No, there's not a legal entity behind it. You just find a bank or a brokerage company that will accept a club.
Okay.
For them to go on and put their money into it. Not all of them do it. And you check with the regular brokerage firms to see if they'll allow you to do it. And I don't know which one those are. I can't tell you offhand. But families form clubs, girlfriends form clubs, church groups form clubs. And I'll tell you my negative story was I thought clubs was an interesting idea. And I gave a group of friends some money to, they were going to invest it because I was too busy, working in a company, had 5 kids, I just didn't have time. And what it ended up being is they didn't know what they were doing. And I
Right.
naively trusted them with my
Trusted
money
them.
and I wasn't involved. So actually, I lost most of the money that I put into the group because in hindsight, once I started learning, it actually was, they didn't intend it to be a Ponzi scheme, but people who put money in and started putting money out, the people who get their money out first got
First.
their money out. The people who put their money in later didn't get their money out. And it
Mhm.
wasn't ill intention. They had good intentions, but they didn't know what they were
They were
doing.
doing.
They didn't know what they were doing. So you shouldn't ever put any money anywhere without paying attention. The other thing people do is you put your money in your 401k and then you never look at it again.
Yep.
Right.
An
Right.
advisor tells you, how many, what entities you should invest in. And I think you should look at those funds to see what their return is, to see what their record is. And each fund has a symbol that you can do research on to find out the performance of that fund. And I spent December like rebalancing my portfolio. And it took me a while to do it. And somebody's like, oh, I don't do that. I let the bank do that or whatever. It's like, that's your future.
Right. Right.
And the older you are, the more they have a tendency to invest in bonds. And bonds are
Yeah.
slower growing equities. And I wanted mine to be more aggressive. And the banks do bring you in, once a year. You can ask to go in once a year and talk to them and say, I want it more aggressive, less aggressive. But you really should pay attention to what they're doing and what they're investing in. If it's foreign stocks, if it's, US stocks, if it's technology, those funds have descriptions of the kind of stocks, how aggressive they are. It's a lot to read, but it's worth it because you're making decisions about the kind of retirement you want, the kind of
Yeah.
cash flow you want to have in your retirement, the money you
Right.
want to, leave to your children. Are you building wealth? Because at some point, if you keep making money, you'll have more money than you need to retire, and
Right.
you'll be passing this money on to the next generation.
Right. Right. What do you mean by rebalancing?
Um, Say you invested in Apple in 2010 when Apple was $20 a share. Apple has gone up to $900 at least twice. So you could end up with our portfolio that's got a lot of Apple stock in it and say only a little bit of something else. So what you should do is take some of the money out of Apple, say, out of other more successful stocks and put it into other maybe faster growing stocks. Because at first, Apple grew very, very fast in the 2010, 11, 12, 13, 14, 15. I can't remember exactly, but it might have been growing, say, 15, 16, 17, maybe even 20%. Now it's growing at 8 or 9%.
Yeah.
So you want to take some of that money and put it into a stock that's now growing, whatever the next one is that's growing at 10 or 15 or 20%. But that's up to you as an individual. It's your choice whether you want to do it. I must say, I do have Apple out of balance, but I also have a philosophy of if I had that money in a money market and was earning, 1 or 2%, I'd rather have it in Apple earning
Right.
7%. So that's my own personal choice.
So, okay. So it sounds like to me, when it comes to rebalancing, that is making sure that whatever your plan was, like if you decided out of my portfolio, let's just say 50% of the assets are going to be, let's just say, in index funds, because I'm conservative, and 50% are going to be in individual stocks. And of the 50% in individual stocks, maybe it's 20, 20, 20,
Hmm.
IT or, tech,
Right.
healthcare, and I don't know. I'm not going to say oil and gas because I'm against that, but I don't know. Consumables.
Okay.
Um, So if Apple is growing a lot, and say maybe I'm invested in Microsoft and Google as well, growing a lot, then my tech portion, instead of it being 33%, could be worth 50%, even
Right.
though I haven't necessarily put more than 33% of my money in it, just because it's growing so much.
Right.
So then to get back to 33, 33, 33, I start taking money out of that. Or I guess another thing I could do is put more of the money the next month into those other two
Exactly. And that's
sectors,
what I do.
as
That's what
opposed
I
to
do.
selling, because selling
Right.
could create a tax implication depending upon
It
where
can
you've got
create
your
a
money.
tax implication. You could be doing what they sometimes call selling your roses and buying weeds, selling a good stock and buying one that's not so good. So what
Right.
I have a tendency to do is buy additional stocks to kind of bring the average up to meet
Okay.
the other technical stocks.
Okay.
So it's kind of hard. And the other reason you do it is that segments usually go down the same, like banking stocks are going down right now.
Right.
Yes.
Technical stocks are starting to creep back
Back
up.
up. Yep.
Consumables are doing, something different. So segments do different things.
Yeah. Yeah. I've
And
noticed
that's the
that.
other reason that you should balance.
My small bank stocks are suffering right now. Thanks, Silicon Valley. They were doing fine before,
They
whatever
really
two
weren't doing
banks,
fine. You mean your stocks are Silicon Valley?
the stock, the ones that I was
Oh,
invested
yeah,
in.
that's because people panic, and that's what happens. They
Yeah.
take it down in the value. They panic. They pull their money out,
Pull
and
their money out.
doesn't mean that's not their stack. Your stock isn't going to
Rebound.
doesn't it hasn't lost its value in terms of its potential. It's
Right.
just lost what it's worth right now. Like there's
Exactly.
a stock that I'm buying right now, and I started buying it in January at $75, and it was a good buy at $75. It went down as low this month, some point this month to $43. I'm buying it like crazy. I'm buying it $30 less than I was buying it
Because the
in
fundamentals of the
January.
company have not changed.
Exactly.
Okay. Which leads to the next question. If we start investing in individual stocks, what are the basic things we should be analyzing?
What you should look for is how well the company is doing and how well do you expect it based on what it's selling, how it's going to do in the future. So Better Investing has provided you with tools to say, how is it doing in sales? Let's use the boot company. There's a company called Boot Company, and they sell boots, and they sell cowboy boots, and they sell work boots. So their sales are going up. Now, this is a stock that I was aware of when it was $20 in 2014. It's now $76.
Hmm.
Their sales have continued to go up over time. People have noticed the stock and they're buying it. But you also look at how much the company is earning. So that's why recently a lot of the tech companies are starting to lay off people because the amount of earnings they're making has diminished because they're spending too much money on overhead. So as soon as you start letting people go, cutting your expenses, your earnings increase and your profit increases. So those are the things that you should look for. And again, if you look on the Better Investing website, which I highly recommend, you can see those tools. And they do have a trial period where you don't have to join.
Right.
And I just think it's a very, very, very useful tool.
It is. So, y'all, when she said sales are going up, but earnings aren't, and you're like, well, wait a minute, you just said sales are going up. So, so the difference between sales and earnings are cost of goods sold. So
Right.
sales is how much money did you make from straight out selling whatever it is that you're selling, whether it's a service or a thing, right? But then you have to subtract the cost of doing
Cost of
business.
doing business. Yeah.
Once you subtracted the cost of doing business, you have earnings. And so that's what she's talking about. Are earnings keeping up with sales, or are they not necessarily not managing their money well, But I know after the pandemic, a lot of folks started asking for raises, and the cost of labor. I hate to call us labor, like we're just another resource, but people needed more money to live, wanted more money to live, and so wages went up. Earnings are going to go down, perhaps. So that's one reason, right? And it's kind of a catch-22 because you need the people that you need, and they cost what they cost. And it's interesting to me because I remember when I was fighting for higher minimum wage in Denver, and I have folks saying to me, well, if we raise the minimum wage, the first people that are going to be laid off are Black kids. Really? Why? I said, so are you telling me as a business owner, you just hire us out of the goodness of your heart? And then if you have to pay us more, then you're going to let us go? That's not a good way to do business. You should never have more folks working for you than you need. Like, what are you doing here?
Right.
Right. So it's hard for me to believe that some of these tech companies have more people than they need. Or is it that the sales weren't what they thought they were going to be? I don't know. Because I have not done the tech companies I'm invested in are still going well. So I haven't felt the need to see to look under the hood as closely at things like that. But that's what we mean by that. So
Well, an
okay.
example would be Microsoft or even
Mhm.
Facebook. Their advertising dollars are decreasing because the companies that buy advertising aren't making as much money as they used to. So they're like, oh, we're going to cut back on advertising. So it is affecting their sales and affecting their profit.
Is that why they're not advertising? Or is it because Facebook sucks?
Who knows?
They have put me through so many hassles trying to advertise on Facebook. I mean, I've sent them pictures of my passport and done all of these things, and every other month there's a new hoop. So when you come to the smaller businesses that would be advertising on Facebook, is so much of a hassle. They're like, just forget it. Just forget it.
Well, the bottom line is,
Sales
their
are
sales
going
aren't what
down.
they used to be.
Yeah. Anyway, I've never been a fan of Zuckerberg's. I just haven't. And so I'm not directly invested in Facebook or Meta or whatever the heck they're calling themselves
Meta.
these days. Now watch we get kicked off of Facebook.
Push that button.
And we'll just go to another platform. There's lots of other platforms. We know that. Okay, so we should be looking at sales and we should be looking at earnings. Is there any other thing that we should be looking
Profit, shareholder return. There is a website that you can access through a public library. You can go to the public library and look at it. It's called Value Line. And it's a company that has analysts that analyze stocks, and they print a report. And you could read the report. You could read it at the library, or you can, if your library has it virtually, you can sign online and look at it. And it will help you focus on how much their sales are, how much their earnings are, how much their profit are, how much is the other thing I look for is return to shareholders or return on equity, what the percentages are. There's just so many different things to look at. And that's one of the hurdles about investing yourself that I would like to talk about is a lot of people say it's too much work. Let the professionals do it. I don't watch football games. I don't watch basketball games because to me, I'd rather take that time and my curiosity and grow it in other ways. So it's like, what are you going to sacrifice? Because you're spending your time doing something, whether it's sitting at a coffee shop or reading a novel or watching a movie.
scrolling through TikToks?
Yeah. Scrolling through your phone. I mean, social media consumes a lot of time. So say, I'll cut back on my social media 30%. I'll take that 30% of my time and use it to learn something different, to open my mind to new ideas, to read one of these investing books or a book on value. Because
Yeah.
if not, it's almost like a trick. It's almost like a conspiracy to distract you from growing.
Yeah. Yeah. And one of the things I can say are the two people that I know who have financial advisors in their retirement are not as financially comfortable as I would like to be if I had if I was paying somebody, because, that costs money, right? And so that's money that's taking away from your retirement money.
Exactly.
Yeah.
And so if I'm going to pay somebody, it seems to me that I should be a lot less stressed about money than the people that I know who have these financial advisors. That's all I'm
Well,
saying. Like, if they know so much, why is she so stressed out?
and it's a personal choice. It's a personal choice. I don't have a financial advisor. I do my reading and take my curiosity and do it myself. I've met with numerous personal advisors, and been given bad advice. I've been given advice that they wanted to charge me like $2,500 a month to manage your money. I mean, that's crazy to me. I'm
Yeah.
like, I couldn't get out of there fast enough. And it's about them and making their money and feeding their families. And I just said, you know what? Even if I made mistakes, I'll learn from my mistakes and
Yeah.
just do it myself.
Yeah. Yeah. And the earlier you start, the easier it is to recover from those mistakes.
Right. And you will make mistakes. It's not perfect. Um, but usually, if you find a good stock will make up for all your mistakes.
Yeah. Um, what was I going to ask? What is return on equity?
Return on the money that's been invested.
So return on the money that we've invested, not that they've invested.
That the company has invested, but that comes to you. It's like, I don't own the business.
Right.
I don't have the desire to own the restaurant down the street, but I give my money to a company for them to invest it, and then I get a percentage based on what I invest in the company. I'd rather them do the work.
So that's a percentage, like for every dollar invested, what percentage is coming back
That's
in
right.
returns?
Right.
Okay.
For the company.
Right.
So when you're looking at ROE, you're looking at the company's return on investment. Then
Right.
there's the shareholders' return on investment.
Right.
And one of the reasons I like to look at it is if you look at the return on E of one return of investment on one company versus the return of investment on another company, say one company is getting 2%, another company is getting 10%. Which one do you think I'm going to look at more closely? The one that's getting a return of 10% because they're using the
Right.
money more efficiently.
Yeah. Yeah. Go for it.
I think she almost answered this question, but I'm gonna ask it.
Okay.
What?
Why should I invest in better investing? Aren't financials available at brokerage companies, sites, and on like Yahoo?
Yahoo Finance.
First of all, you're not really investing in, well,
And,
$120 membership
yeah,
fee or
I
whatever.
right.
consider it school fees.
Okay.
That's how I refer to it. School fees.
So you're investing in your education.
I'm investing in my education. I'm investing in tools. Um, and I haven't found a website that has given me the tools that Better Investing is giving me, where I can actually plug in the numbers and
Right.
run scenarios. The investment sites that I've seen are analysts. They're running the numbers and coming to a conclusion, and you are looking at their website, looking at their conclusion, and making an investment decision based on what they've analyzed.
Yeah.
What Better Investing encourages you to do is look at all those websites, or as many as you want, 2 or 3, compare what those analysts have said, and then you decide. Say if all the analysts say a company is, their sales are going to grow in 5 years to 15% or 17% or 20%. Well, you can decide that you want to look at your numbers based on maybe only 14%. And you plug your number in and say, is this worth the risk if their sales are 15% over the next 5 years. So it gives you the tools. And I think, how many cappuccinos is that? How many cups of coffee is that a year? At least try it.
Yeah.
Based on, buy one less dress,
Here, that's a lot of coffee. But in the States, maybe 5 cups.
I just think it's a tool that's worth the investment.
Yeah.
And try it for 30 days. I mean, I think it's a 30-day trial right now.
Okay.
Yeah. And
They also have a national convention, which is amazing. I went to Texas this last summer, and your mind will be blown by the amount of education and knowledge and shared information. And the one thing I really like about Better Investing is they want to share this other information with other people so you can be as successful as they are at doing it. It's like it's a teaching environment as opposed to just an investing environment. It's like they're so excited about what they're doing. They want to share this information and teach you how to do it. And that's very different than other websites. Like the Motley Fool, for example. I'm not putting them down by any stretch of the imagination, but they make recommendations of stocks. Better Investing doesn't make recommendations. They're saying, oh, as an individual, I found this stock. I think it's pretty interesting, but you take a look at it and you do your own analysis and see what you come up with. So they don't take any responsibility for investment decisions that you make. You look at the information and read about the company and decide whether you want to put your money in it.
Right.
What I like is when they get on and they'll do that. Like they'll bring up, I don't know, the boot company, whatever. And they'll start pulling up the financials and say, okay, based upon our philosophy, and they're asking the other person who's being interviewed or whatever, would you invest in this and why? Okay, now look at this chart. Would you continue to investigate this? And so they walk you through their thought process on why they made the decision so that you can learn from how they do it, right? And that's what I like, because I need to understand it. I need to hear it. Then I need to see you do it and see it in action so that it solidifies and so that I understand that I can make sure that I understand the concept behind it.
And the value of the videos is that they're online. So
yeah,
what I found is that if you watch it the first time, there's just so much information. You watch it again and you can pick up something that you didn't pick up.
Yeah.
God, there was one thing I was going to say and I forgot, but I'll think of it in a minute.
I'm sorry.
No, it's okay. I remembered what it is. The other philosophy they have is that it's like a Warren Buffett philosophy. And it's the reason it's value investing is you shouldn't overpay for the stock.
Right.
So they set minimums at what you should pay.
Yeah.
Not set minimums, but they suggest minimums at what you should pay. So there's
minimums or maximums?
Minimum.
Okay.
You're right, maximum. It's a maximum that you should pay per share for a stock. And it usually is in a category, a range of price that you should pay. Otherwise, you're overpaying for the stock.
Right.
And stocks that are really hot, that's typically what happens because everybody's buying it. The stock is going up and you buy it when it's gotten really, really high and you've overpaid for it. So it's like you need to let that one go and look for something that's on a much lower level and you're buying it at a good value. So you can ride the stock price up and earn the value.
Yeah, that's the problem with my Ulta stock. I don't know if they're going to do a split or what, but it has gone up so much, and so now I'm hesitant to buy more because but it does keep going up. It's at like 46% now.
Yeah, but what's the PE?
So I can't remember right now.
But those are things you should look at because then you're overpaying it.
Yeah. Well, exactly. I think I would be right now, not originally. But right now, I think
Ulta was one of those early stocks that came out in Better Investing, like at least 3 or 4 years ago, before it really started taking off. And that's what the other thing I like about the organization. A lot of people really look for undiscovered stocks, new
Yeah.
stocks. It's an
Mhm.
opportunity to get in early.
Yep.
And it's just, these aren't professional people. It's ordinary people
Yeah.
who have an interest in investing
Yeah.
themselves.
I don't think any of them have a professional certification. The ones that I see that do like the bull sessions and stuff.
Um,
Do they?
they've never said.
Yeah.
They
Yeah.
see they're people that have just taken an interest and learned on
Yeah.
their own. They
And
might
they'll
have
do
had previous
right.
experience, not those
Mhm.
people that you're talking about.
Mhm.
Some people might have had previous experience, and those people share their knowledge.
I love it. I love it. Okay, I'm looking at the comments here. We've got one more question, but I want to start taking your guys' questions. So, hey, Phyllis, Jen here. Oh, do you know who that is?
Ah, yes, a
And
cousin.
okay, hey, cousin. Hi, Teresa from Atlanta. Okay, Jen from the ATL.
Yes.
Raquel Flying Free. Hey there. Okay, I am looking for questions, y'all. And I saw, let's see, Phyllis, visa being processed, or maybe you're talking to another Phyllis, shipping off mid
That's
23.
furniture.
Found a buyer for all my furniture. What do I do with the money? Oh, opened account at Fidelity. BP, what do you mean? What should you do with the money? Do you really think she's going to say, okay, buy this stock, buy this stock, buy this stock? You know that's not how we roll.
I'm not going to say that. I will not take responsibility for anybody and how they invest. I mean, Halisi and I have talked about this over the years, and we talk about stocks and stock ideas, but ultimately, you have to make the decision because it's your decision. You know, I might want to take more risk. I might be willing to take less risk. How much risk you want to take is up to you.
Right.
I'm not a
Exactly.
financial advisor.
Exactly. And then the other part is, like we said, BP, and I can't remember all of your story. We talked about being in the right financial position to invest as well, right? So I'm assuming that all of your debt is paid off if you are not coming here necessarily, but moving out of the States, um, shortly. If mid 23, that's coming up in a couple months. Gosh, it's April.
Yeah.
Oh my
flew
gosh,
by.
time flies. So, so what do I do with the money? And the other thing is, that we always kind of tout is, whether you're going to invest in real estate or whether you're going to invest in stock is always to find that value, to buy something that is undervalued for whatever reason, right? That the fundamentals are there, whether it is a good house that just need some lipstick and rouge because grandma has lived there and nobody else happens to be looking at it or whatever. And you can get that house under market value, that duplex under market value, right? For an investment property, or if you're talking about stock. So if it is an index fund, then, that's a mutual fund. It's going to be what it's going to be. But you should still run the numbers and look at it because all index funds and all mutual funds are not created equal,
Right.
and make sure that you are not paying too much in fees if it's going to be a mutual fund. We're glad
And
that you
different
opened it. Go ahead.
funds focus on different things, some on technology, some on real
Yeah.
estate,
Mm-hmm.
some mixed, some international. So you have to decide.
Large cap, mid cap, small cap, which means larger companies, mid-range companies, smaller companies. So all of that, there are different funds for all of that. And there's some that just is supposed to be everything.
The other
But
thing I want to tell you is that Better Investing has clubs that people who live internationally can join. Most states have a club, and they have what they call model clubs. And model clubs, you can call into the meeting and join the meeting from anywhere in the world. Someone from Portugal just joined the Georgia Club.
Huh.
really?
And she lives in Portugal, and she calls into the meetings from Portugal. She was between Mexico and Portugal. I think now she's in Portugal. But there's also and you put money in the club. If you have an American bank, you can transfer money into the account. to join us and pool your money with ours and grow your money. There is also an online international club, which is very thorough in terms of how it evaluates stocks, but they don't invest real money. It's like they share ideas and they
Okay.
do presentations and they have a paper portfolio, but they don't actually put in money. Somebody's in it from China, somebody's in it from Canada, somebody's in it from East Africa,
Oh,
and they
interesting.
just meet monthly online. I think it's on Monday nights, but it's on the Better Investing website. If you look for it, you can find it.
And that's good. You know, that is a good situation if you still need to be paying off credit cards, because you can start learning now. You can invest on paper, right? So you're acting like you're doing the investing, but you're paying off your debt and stuff, but you're getting that knowledge and actually going through
Then the other thing,
the
and in
process.
keeping with that, say you're paying off your credit cards, but say a club requires, say, a $25 a month minimum. I would actually recommend even taking that $25, have 4 less coffees or something, and put that money in the investment. And so you will have a buy-in and be more connected to get involved and start investing. That's when you're pooling your money. That's a way to get started.
Yeah, definitely. Should you invest in your 401k up to the company match until you pay off your credit card debt?
Yes, I say that. I say yes,
Yeah,
because
I
it's
agree.
tax-free money.
And that 6% or whatever the match is, Phyllis was saying back in the day, one of the companies she was working for was matching up to 10%. I
Little
mean,
did
that's,
we know. We
oh
didn't
my
understand.
God. Oh my God. Oh my God. Oh my God. Um, it's not like you can say, okay, I'm ready now. Can I get that money from the past? No, that money's gone. That money is gone. And so much of the budget that they set aside for match goes unclaimed.
Yeah.
Don't
If
be that
you're
person.
investing 6 and they're putting in 6, that's 12%.
Exactly.
If you're putting in 4 and they're putting in 4, it's 8%. So definitely,
Mm.
I would highly recommend figuring out where you would cut in your spending to get that match,
Yeah.
or at least plan for it for your next raise. Don't spend the raise, put the raise into the 401.
There
Right.
you go. There you go. What tiles do you suggest we read? Oh, titles,
What
probably,
titles?
Jeanette. Do you suggest we read to get going? Boglehead, Simple Path to Wealth. One of them we have put in the description below, which is Peter Lynch's One Up on Wall Street. And I read that about 3 years ago. It's a quick read. It's an easy read. And it's
That's the first book that I read. Actually, a friend gave it to me before I really started investing. But it made me, and I went back and read it when I started to invest. It made me believe that I could do it myself, because he gives practical examples
Hmm.
of, I have a friend who was, in fact, the friend who gave me the book. He said he started noticing the Chipotle lines, and that's when Chipotle was cheap.
Right.
It was like $20-$30. He started noticing, people going to Chipotle. Now that stock, at least a few months ago, I haven't looked at it, was $1,300 a share or something like that.
oh my God. They must
Yeah.
not have a lot of shares out there.
I don't know. I haven't looked at Chipotle. It's been too expensive for me to consider it. It did go down during the remember the scare they had when there was
Yeah.
something wrong with the
Right.
The
Right.
chicken
ingredients
or
or something.
something.
It did
Yeah.
go down. But that was him just watching what was going on. He's like, what's this new product? Everybody's investing. Everybody's in line getting food. Let me look at this.
I have eaten so much Chipotle. Why haven't I invested? Right? Like, and that's the thing. After my 5th trip to Ulta, I'm like, I know Ulta. I know why I shop at Ulta as opposed to Sephora, and everybody else is in here too. So let me
Exactly.
go start doing my research.
Exactly. Those are
Um,
good. That's a real good example.
yeah. Any other books that you can think of offhand?
Books on value investing. What I'll do is I'll put together a list and give it to you, and you can distribute to people.
Okay. Okay, y'all.
Value
So in the
investing
next
talks
couple of
about
days, come back to the description and I will have the books and the links in the description below.
value investing means not overpaying for a stock.
Yeah.
And it teaches and it talks about why you shouldn't overpay for a stock because you're paying too much for it. You'll never get not never, but it'll take you a longer period
A
of
Takes a
time to
longer
longer
get your
time.
money
time.
back.
Yeah. So I overpaid for one company that the financials looked great. But I bought it right before the market started going back down when everybody was still crazy and probably buying GameStop and what was it, and AMC and all of that
Yeah,
nonsense.
AMC and GameStop.
And their financials still look great, but I have yet to break even on that stock. I paid too much for it. I paid entirely too much for it. So it's a solid company. It's, as long as it remains a solid company, I'm sticking with it, but it's going to take a long, long time to get back to where it needs to be. So if you're
And this is
30,
where I'll use that as an example of if we were in a group, I would say to Halisi, why don't we consider selling this at a loss? I've found a company that's going to grow at 20%. At least our money will be growing at 20%. And let's
right,
discuss it, the pros and
right,
cons of why we should do that. And that's the benefit of working with other people and running your ideas behind other people. Because rather than waiting for 5 years for a stock to try to make up for the loss,
right,
take the loss, take it on your taxes, and take the money and invest it somewhere else and grow it faster. Because it might come back in a year in the new investment, whereas you'll be waiting
right.
5 years for it to come back in the other investment.
Exactly. And I'm expecting 5 years. So that's a great, great, great advice, which leads to number 6. How do we know when it's time to sell or take a break from a stock?
I can't really tell you that. What I'll tell you is that Better Investing has tools and seminars to help you make that decision. It's like when you've made a certain amount of profit or when you need the money, or say the company does something that you think is a bad decision. Like, what are some of the bad decisions Amazon made a long time ago? Like, I don't know. I can't remember. They bought something that didn't make sense. Or so you have to
Peloton.
keep, huh?
Peloton.
Yes. Okay. Peloton's a good example. I own Peloton stock. I'll tell you my Peloton story. So I had decided I wanted to buy a Peloton before we really understood how bad the pandemic was going to be. But I decided I wanted the 30-day trial. So I bought the machine. I went away to South Africa and I came back and I bought the machine. So the guy delivers it at my house. And this is just as the country is starting to talk about shutting down. He said, "Oh, the stock is $22." And I thought, I don't want to go to the gym. I said, if they shut down the country, maybe they'll start selling other people want to exercise. So I bought the stock. So I wrote it all the way up and I decided I'm going to hold onto this stock until it pays for my Peloton. So actually, I ended up with like about 3 or 4 Pelotons. But when I don't know, remember, my son told me, Mom, there were other companies that came along and had developed machines that you ride at home. I can't remember the names of them right now, but Mira was one of them. There was another ride-on device. And when Peloton started getting competition, I realized that eventually that stock price is going to begin to erode as new process. So it's like part of looking at research and part of your instincts.
Mm-hmm.
So I ended up selling Peloton, especially after I listened to an earnings call, and they were so far behind in demand. They were going to spend $100 million to fly Pelotons to the UK. And I said, that's it, I'm out. I mean, that means to me, that was just it. And I took my money off the table and got out. And at that time, it was still going out. But to me, that was too big of a risk.
Right.
Yeah.
And that's what happened. So,
And so did the stock price go down after that?
yeah. And as
Yeah.
you know now, it's like $9.
Yeah.
Wow.
Because if you think about it, the people who were running the company had this great idea, but often people who start a company,
Yeah.
when it gets to be that big, really don't understand how to run a company. You
Yeah.
saw it with Apple and Steve
Yep.
Jobs and all of that. They don't
Right.
know how to run these big companies. So I just got
Yep.
out. I'm like, I can't ride like that. So got out.
Yep. And that's something good to know. So working at the venture capital firm, we'd see that a lot. The person who founded the company, who got it to the point where we would want to invest, does not necessarily have the skill set to run a mid-range to large company. They have not taken a company from from where sales are like this to go to that next level. And so you got to think about that when you're looking at these companies. So, Auntie Trey, what investing advice can you offer someone who will be retiring? Oh, okay, Auntie Trey. On December 30th, 2023, you are retiring. The exact date. I am matching my 401k, but I need to get aggressive in these last few months that I have left. Just to let you know, Auntie Trey, we are still investing. Like, we're not investing 70% of our income because there'd be pennies left. But we are still investing about 20% of our income in retirement. So just to let you know, it's not like, well, I suppose it depends on how you want to do it. But for us, it wasn't like we were going to stop once we stopped our W-2 jobs.
Right.
So, okay.
She says she's matching her 401, but she wants to get more aggressive. Does that mean she wants to get more aggressive in her 401 allocation, or she wants to invest additional money in stock?
Yeah, that's a question, Auntie Trey. And then the other question that I have to be able to better answer your question is, obviously, if you're just matching, you're not maxing out. And the max out is $20,000 plus, depending upon how old you are. So when are you going to need this money? Are you going to need it before 59 and a half? And are you going to have to do the latter? Or are you of an age where you're not going to need it until you're penalty free? So that's the other question. So let us know and we'll get back to you. Alexandria MD, are you mostly invested in individual stocks then instead of index investing?
Yes.
100%. Like, I don't think you own any.
100%, but I am more invested in equities than I am
Okay.
in
Do you have index funds?
I do in my retirement
Okay.
account. I'm still working.
Well, that's true. Yeah. I remember my grandfather giving my grandmother his checks, less his allowance, and she would put the money in her Bible.
Yeah.
That's how we rolled. That's how we rolled. We're talking about the mentality of not understanding money and thinking that money is the root of all evil. Yeah, Jeanette, we all wish we woulda, coulda, shoulda, right? But don't beat yourself up because
It's not too late.
it's not too late until you're 6 feet under, right? Like, it's not too late. And a lot of us are in that position because we didn't, generationally did not
We didn't
have
know.
access to the information that other groups of people had. We just did not. And then some people, just because of religion, had an aversion to talking about money. So, all right, here's another question. Between two pensions, two TSP 401ks, and two ads checks. I'm not sure what that is, Paulette. My wife and I will be fine enough in retirement. Very good. We would like an additional stream of passive income. What's your opinion on dividend stocks and or ETFs?
People in retirement often look for dividend stocks. Actually, they have a tendency to look for more dividend stocks. I've even thought about being less aggressive and looking toward dividend stocks myself. I do consider them more. And I'll be honest, I mean, I'll be 75 in July. I didn't start really thinking about dividend stocks until about 3 years ago. But you do need to think about it. But also, you need to watch them.
Mhm.
Dividend stocks can also be an indication that a company is not growing as aggressively in terms of their stock price. So they're giving you dividends to keep you in
Invested.
committed to their stock and invested in their company. So they give you dividends, like giving you carrots to keep your money. So there's even a tool on the Better Investing website which helps you look at total return to consider the dividend plus the growth of the stock to see if that's something you should do. So yeah, lots of people, but you have to watch it. GE is a perfect story of people who were counting on those dividends and then had to change their life drastically because GE wasn't really telling the truth about their
Their
financial
money.
status, and they were manipulating things behind the scenes to make the stock look better than it was. And there were people who were living in retirement depending on those dividends who had to change their life completely and were devastated by that when they stopped paying dividends. So you can't
Mhm.
just be relying on dividends. And I know you're talking about it as an additional source of income. So I think dividends are good. And I'm
Yeah, but that's a good story because everyone, there's other people on here who might have a similar question, but don't have pensions and all of that coming in, right?
yeah,
So it's interesting because you said you just started looking at dividend stocks because you've been more aggressive. So to me, that says then dividend stocks are less aggressive or a little bit more conservative.
they're more conservative. They're companies like Disney, Apple. I mean, if you remember, a
Mhm.
shareholder had to force Apple to start paying dividends. They were just
Yeah.
hoarding the money. Um, and companies who think they have the potential to grow want to hold on to that money to make more investments. It's the more stable companies, the P&G, the old Johnson and Johnson. Those are the older companies.
Coca-Cola.
Yeah, Coca-Cola. But again, look at the tools. Are Coca-Cola still sales still increasing? Is there still a profit to be made? So it's a combination of things.
Tell you one thing, they drink Coca-Cola in Mexico like it's water.
Oh,
Oh, all over the world.
probably because
It's
it's better than
disgusting.
one.
It's
But
disgusting.
Coca-Cola is everywhere.
I,
yeah,
Yeah.
I just, I would see those men out in that heat, working on construction sites with big two
Two
liters
liter
oh
bottles.
yeah.
of
No, it's all over
Coca-Cola.
the world like that. But if you think about the quality of water in other parts of the world,
Right.
even when you're traveling, I would drink
Yeah.
a Coke as opposed to drinking
Yes.
water, unfortunately.
In some countries, absolutely.
Because I
And
know in some countries where they take the bottled water and they fill it with tap water and then they take it and seal it back up. So you're not necessarily getting sealed bottled
Yeah.
water. So you have to be
Yeah.
careful when
You
you're
have to be
traveling.
careful.
And it's better to drink a Coke.
where did that happen?
I'm not telling you.
Well, I want to know what country I
I'm
need
not
to
going to
watch
tell you
out
on this
for.
YouTube video, but I
Okay.
will tell you.
You gotta let me know because I mean, doggone. And I wonder if Coca-Cola in the United States sells more of their other stuff than they sell of the soft drink, because they make the teas and waters and all of this other
Pepsi.
stuff.
Pepsi makes a lot of money on all their other brands.
Oh, but Coke doesn't. Interesting.
Now,
Okay.
I'm not saying they don't. I'm just
Yeah,
saying
they
Pepsi
do,
is
but
really
Pepsi
good
does
at
too.
doing that.
Yeah. I don't think I buy products from either one of those companies. So okay, Paulette. Let's see. Rule of 72. I guess you're just saying that. Um, so if you guys don't know what the rule of 72 is, that's a way to figure out when your money will double. So just Google it. Broad-based index mutual funds are best. Buy large investing. Okay. Love stocks on sale. Here we go. High interest rates and high inflation will probably remain for a while. What's your wisdom to share for investors in these choppy investment environment waters? Yeah, high inflation.
Keep
And
investing. I asked my son this morning, I said, how much was gas when you were little? Because I remember. He said 39 cents. I remember when it was 25 cents. So if you're living on a fixed income and gas goes up to $3 or $4, how are you going to buy gas? So you have to keep investing. And there was a time people were saying, oh, 40% bonds. I don't think anybody's saying that anymore. People understand that it's very important to keep investing.
yeah, and when the interest rates go up, usually bond returns go down.
I'm not invested in any bonds.
Nor am I. And
So
I
I
do
don't
not.
really know a lot about bonds because I'm more aggressive.
Yeah. So no bond questions. So wait a minute. Nye remembers when gas was 39 cents a gallon.
It does.
I don't even remember that.
Nye is a really good member.
I certainly don't remember that. It wasn't when I was driving.
No, it was when he was little.
Yeah.
Like 8 or 9 years old.
It seems to me that I remember when it got to be 50 cents because I remember the long lines and then you had odd even days. And I remember them showing on the news, 2 gallons, $1, So I think,
I remember standing in line for gas during the gas shortage.
Yep. Okay, Isan one, how you doing? I don't even know how to read the stock exchange. Are you going to get down to the basic and show a picture so someone like me can see how to read a stock exchange report? So I guess I need to know, what do you mean? What do you mean by reading a stock exchange report? Or do you mean reading the financials of a company?
I think he or she might be thinking about, when you read Wall Street Journal and you read the stock
ticker.
Exchange, knowing the ticker, knowing, the ups and downs, the pricing, how much it costs, how much is going up, how much is going down, just that information, because a lot of people don't get that. They don't understand it. And I mean, I haven't read the Wall Street Journal in a long time, but, just there's a lot. I'm sure Better Investing teaches you how to do that too, how to read a stock report.
Yeah.
I am a little bit puzzled about the question. I'd say you can't really learn what to invest by reading a stock exchange report.
That's what I was going to say.
You really can't make a decision based on that because there's no context for it other than this is what the stock is worth. This is what it's been in the past. This is what it was in the last few days. There's no context for it.
Right.
So what you need is a tool that helps you understand where the stock is now and potentially put information together to project where you think it's going to go. And just reading a stock exchange report doesn't give you that.
It doesn't give you that, Isan one. So, and what we mean by that very, very, very specifically, reports and analysis, that's just somebody's opinion. So the report is the report. Those are the facts. The analysis is an opinion, and we all have them. But the opinion has to be based upon something. What is it based upon? It is based upon the financials, right? So if I wanted to do a report on your financial position, I would need to know how much debt you have. I would need to know how much income you have coming in and what your expenses are. And then I could give a good financial summary of where should we invest in Isan one, right? How are you handling that debt? Did you get in debt to create more value for yourself? For instance, like, you are in debt because you have bought some rental property? That would be investment, right? Or is it debt that you are not managing well? The same is true for a company. So just like you would look at your own financials, you've got to look at the financials of the company. What income do they have coming in? Is it going in the right direction, or is it plateauing and flattening out? You need to know how much of what they're making are they spending? And is that going up? And if it is going up, why is it going up? It can't be going up more than sales are going up, hopefully. But why is it going up? Is it going up because they're making investments for future products that they believe people want? Or are they spending reckless? What are they doing with that money?
Mhm.
Right?
I want to respond to Isan.
Sure.
There is no easy solution to what we're talking about.
Mm-mm.
You have to educate yourself. And it sounds, I don't know how it sounds, but anyway, it's like I look at your question and I say, I remember when I was like that. I put money in a 401k blindly because that's what we were supposed to do. I didn't know it was to my advantage to do the 10% max. I was so busy doing my job and raising my children. I didn't pay attention to that. I'm like, oh, it'll just take care of itself. But what I found out later is that if you pay attention and if you learn, you will even do better. But you have to start somewhere.
Yeah.
So whether it's reading a book from the book list that we're going to send, um, and I remember the age that I started paying attention. I remember I was 56. So I don't know if anybody's older or younger. That's where I started paying attention.
So
I
that
didn't
will
know the
give you
difference.
hope if you're only 50.
I didn't know the difference between a Roth, a 401k, any of that. Did not know the difference. And a friend of mine in a group I belonged to gave a report by reading a book and asked if anybody wanted the book. And I took the book and I started reading. And that's when I start to begin to understand planning for retirement, growing
Yeah.
money, etc. So you've got
Yeah.
to put
Mhm.
time in and learn.
Yeah.
Even if
Yeah.
we did a demo, we can't show you a demonstration of the stock exchange report because there's
There's no
no
content.
there's no nothing to compare it to. Just
Exactly.
looking at a list of stocks and what their numbers represent. There's just
And here's the thing, Isan, and this is why we keep mentioning better investing, because if you really, really, really want to understand how you evaluate companies that you would potentially want to invest in, the tools that we're talking about, like if it's an analyzation of the sales, for instance, and just that financial report, there's a little tutorial on the side of the chart. Once you put in like AAPL for Apple, for instance, right? And their sales come up over the past, whatever you want to see, 20 years, 10 years, whatever. Yeah, well, I don't know if they've been on the stock. Well, I guess they have been on the stock exchange 20 years at this point.
Yeah.
20 years, 10 years, 5 years, whatever. But on the side of that, there's a little tutorial on how you analyze that financial report. And it literally walks you through, okay, next, hit this tab. The next report comes up. Are you looking at other companies that are similar? So pull up, they'll give you a list of the competitors to that company. Look at Microsoft, look at the other software hardware companies and see, are they doing better? Are they doing worse? Are they doing the same? And then you look at the market average, right? So all of that is the context that creates that is behind those reports, or at least the analysis. The report itself is just the facts.
Right.
So all of that has to be considered, just like as I was taught. I like to explain it in a way that everybody can understand, and analyzing the financials of a company is very similar to figuring out your own financial position. It's very similar, except for you don't have outside investors that you have to piece, but and so if you understand it that way, a lot of us don't even understand how to figure out what our financial position is. So when I say we went from negative 22,000 to over 1 million in net worth, people think we've got $1 million cash laying around somewhere. And how did you go from having, negative money to having over $1 million cash? That's not net worth. So the other thing is to understand the terminology and what net worth is as opposed to liquid cash. And this is not to be discouraging at all. And again, we do go over a lot of this and show you the charts in our course, which is listed below. Do you
I'd
worry?
like to take the time, and Halisi can send the link after this. I belong to something called the Georgia Model Club. I live in Georgia, and we have an online club the third Saturday every month to show and demonstrate the tools of the Georgia Model Club. And there are other model clubs all over the country, but that's the one I belong to. And we welcome people to come, listen in, bring questions, look at the methodology that we do. And there are some very experienced investors in that club, including the president and some of the cabinet of the Georgia Model Club belong to that club. And it's an online meeting and it happens once a month. And you'll learn a lot. So that's where the woman who lives in Portugal found us and joined us. And eventually, after attending, one or two meetings, you can join the club if you're interested, but it's an opportunity to learn. That same club also has an educational component on the second Tuesday of the month where people can call in and ask questions. So I can send Halisi that link as well for the educational. And then the Florida chapter has one that I know of. I mean, I listen to them all over the country, California, Michigan, Texas, and you learn a lot. So
And so you guys, we'll continue with the questions, but we have time on our calendar set aside to do this, right? If something is important to you, and this should be important to you, put it on your calendar. You got happy hour with the girls on your calendar. You've got workouts on your calendar. Taking an hour at least once a week to hone your skills, to learn something new about investing should be on your calendar as well. Alexandria asked, do you worry about being able to manage your investments yourself when you are much older?
I don't worry about it because I'm going to manage them as long as I can. And I was very encouraged. I was with a friend this weekend. I mean, the last couple of weeks, and she was 86 years old, managing her life. And I'm like, okay, I've got another goal. But when I get to the point, I don't want to do the everyday management, et cetera. Then I'd probably move to an investment fund, or an index fund, or have one of my children manage it. But if you don't have children, I'd say at that point you could probably move to an index fund or something like that, where you still keep your money invested. It's in a safe investment, and I'd say probably a low cost index fund.
Yep. Automatic diversity. What gets you interested in a stock in the first place? Oh, that's a good question, Latanya, the senior insurance advisor. Like, what is the first thing that puts a stock on your radar?
Again, one of the things about being in the better investing community is one of their goals is to find a gem, a new stock, or a stock that people haven't heard very much about, that's a lower value stock that you can get in on the ground floor and buy it at a good value. I mentioned this stock that I started buying in January that was worth, I think it was $75 the first time I bought it. And because the stock market is going down, I've been buying it lately at 45, 46, something like that. But that's what someone in that group had found that stock and shared it. And that's where I get a lot of my ideas. That's where Ulta came from. I got one of my clubs interested in Apple back in 2010 when it was really, really reasonable, and I loved Apple and thought it had a lot of potential. So it's sharing ideas. But even if you hear about an idea at the hairdresser, you should still go home and do the research. But a lot of my ideas come from the better investing community.
Yeah, a lot. I would say all of my ideas have come from the better investing community or Phyllis. But I still do my own homework. I
Yeah.
still run the numbers myself to see, okay, yesterday it was a good buy. Is it still a good buy today? Especially when the market was going like this. So we answered that question. You know that she's still working, and I'm going to say, Alexandria, we retired early because we didn't think we could retire. So if you didn't think you could retire, any retirement is retiring early. So Phyllis, bank stocks down. Goodbye now. Okay.
Yep. A good bank. If you find a good bank, and that's the key to anything, you know, any company can have a problem, or any sector can have a problem, but all of them aren't bad. So the banks that were having problems, or discovered to have problems, were high risk banks. There are still some good banks out there. You just have to use some tools and find them. And it's not a guessing game. You have to use the tools.
Yeah, no, it's not a guessing game. Do you have any tips for stock investment taxes while living abroad? No, she wouldn't have that information. We're not tax professionals.
Not tax people.
But I'm not sure what you mean by stock investment taxes, unless you mean the taxes that you pay on the dividends. And it depends on where you live. I mean, I will tell you that because we're going to have an expat tax specialist on the 23rd of, so mark your calendars, April 23rd, Sunday, April 23rd.
Yeah.
We are going to have someone who specializes in expat taxes. So bring your question then. And what I learned from her is that it depends on what the treaty was with the United States and that country. So what taxes you may or may not pay on any dividends earned is what I'm assuming you're asking about. Do you ever, or have you ever invested in penny stocks?
No.
Why not?
Too risky.
What is the average long game you have experienced? How many years did it take you to see a good increase? And I'm going to ask that question in general. She's asking it specifically about penny stocks, but I'm going to say in general because you say you ain't invested in no penny stocks.
Well, you can see momentum, and that's very exciting to see momentum. You can see the momentum in Peloton. I can see the momentum in Lululemon. I can see the momentum in Apple, for example, back in 2010.
Yeah. And so go ahead.
And all of them don't have that momentum, but it's exciting to see a stock that you've bought that people are catching on to. And Apple's the perfect example.
Yeah.
You know, back in 2010 when I remember when it was like $2 at some point, say in 2000, I don't know, 7, 8. And I remember I was at the Apple store doing one of those training classes, and this kid said, my father put his whole retirement in Apple stock. That man is a multimillionaire now. I don't know if I'd have been brave enough to do that, but I'll never forget that kid saying that, because his uncle or father, I think it was just so into it. He put his whole, and that's totally not recommended. That was total risk, but he did it.
Total risk. However, they were the first with the iPhone, and anybody, once you experience the iPhone the very first time, should have invested. I didn't invest because I didn't think we could afford to. I thought at that point that stocks were already like you had to come to the table with all of this money. So I didn't know I could just, show up with like $1,000. I had that and buy some shares. I assumed without investigating that I couldn't afford to do it.
Right.
And so then how many years does it take to see a good increase? It depends. It depends on the company and what's happening in the world at that particular moment vis-a-vis the industry or sector that company is in. Please go over how to read a stock report. Okay, so we talked about that. We talked about that. Question, Jennifer and ATL, right? We know who you are because ZDMG I've never seen before. So welcome. Hopefully you will subscribe. Do you ever invest in? Okay, we answered that. Individual stock versus index funds. What are your personal preferences?
I have both.
Do you have a preference?
I like individual stocks. That's my preference.
You know, Bill, I think it's not about a personal preference per se. It's about how much time do you have to dedicate to studying, how much risk averse you are, right? And what are your plans? Should be your reasons for investing in individual stocks versus index funds. And I'm not like, we're invested in both. But yeah, so, like we could have a personal preference, but that doesn't mean that that would be a good idea for you.
Say
So,
this, I'll give this example. If you have everything vested in individual stocks and something happens to you, you get sick, you get COVID, you can't look at your stocks for a year, anything could happen. But if you're invest in an index fund or somebody else is managing a portion of your money, at least some of it is being managed. So that's what you have to think about. You can't put all your eggs in one basket.
that's a good way to put it. Miss Phyllis, are you from the South, Vicky? Would you mind sharing the titles of okay, so we're going to put the list of the books. Hopefully we can get that list today and we'll have it a little later on. It's 10 o'clock here, but it's only 3 o'clock, I guess. What time is it there? 5 o'clock?
5 o'clock in Atlanta.
Yeah, we started at 3:30 your time. That's right. Can you give the title of the author again? So it's in the description below, y'all, at least the one that we have. We do have some other books about investing in the description below from the last time we had Phyllis on. So, but the one that we're talking about that you should start off with is Peter Lynch, One Up on Wall Street. And there is a link right below the description on what this video is about.
So
Chipotle, Action VJ says Chipotle is at $1,700.
Yeah.
God.
What do they have? 10 shares out there?
Yeah.
Wow.
That's one of those ones you look at and you go like, golly, why did I invest in it?
Yeah. Yeah. I mean, as much Chipotle as Jabari, Rick, and Halisi ate, but during those days again, I didn't know there was a such thing as a fractional share.
Well, there weren't in those days.
Well, there were like 3 or 4 or 5 years ago, right? Or no?
I think it said less than that. I think it's only been the last few years, like 2 3 years. They've done fractional.
Really?
Yeah, they weren't.
Okay.
It's a new thing.
It's
And
about 3 years old.
What has brought it on is younger, less experienced people becoming interested in the stock market and the technical availability.
A lot of the ease in investing was just not available when we were in our 30s.
Right.
It just didn't exist. And so for that standpoint, Jeanette and other people, give yourself a break. Because access to the knowledge was not as accessible as it is today. You had to really be purposeful about it,
or you had to call your stockbroker and pay them $25 every time you bought a stock. Their fee was $25 at Charles Schwab. Right. And that was a less expensive firm.
Yeah.
You had to pay the fee. So now you have to pay. And then online, it used to be, say, $4.95 or $10 fee. And now there's no fee.
No fee. No fee. So do you know what drips are?
Dividend reinvestment.
Yes.
Okay.
We do that.
Oh, dividend reinvestment plans. Yeah. Well, it's all of our stuff is set up to just reinvest the dividends. What are your thoughts on that?
I did it a long time ago when I first started investing. The first stock I ever bought was Walmart because it was always my dream to buy Walmart. but it wasn't a good time to buy Walmart. I bought it without any knowledge before I knew anything about, well, I knew about better investing, but it wasn't as online then as it was. Um, and Amazon would have been a better choice because, retail had shifted, but I didn't know because I didn't do research. I just didn't understand how things had changed. So when you invest, you might think, oh, this is something I've always wanted to invest in, but you have to think about what's new and what's coming.
Mm-hmm.
That if you want to make larger gains, if you will.
Yeah. Yeah. Parking lot is always full of Whole Foods. Whole Foods is Amazon, baby.
That's Amazon, yeah.
Whole Foods is Amazon. Oh, you got out at a
If
good
you're interested
time.
in a supermarket, look at Sprouts, which is the
Yeah.
same concept, but less expensive.
Mm-hmm.
Yeah.
I'm not recommending it. I'm just saying, look at
Look
it.
at it. Investigate it. This is really smart stuff. Also, the first time I've heard someone say so clearly that research, instinct, and personal goals pay for my Peloton. Yes, Professor. Yes, yes, yes. Okay, Auntie Trey. Thanks for answering that question. You really answered my question. I need to max out the 401k match, and I am of age, so I'd like to have access to it January 2024 so I can redistribute some. So
You
not
can
just
redistribute while it's still invested.
so yes, you can redistribute while still
Mhm.
invested. And when I say max out, I mean like as much money as you can. Once you have, because I think you're moving abroad. Once you have, hopefully you've got your strong semi-cash emergency fund, because moving abroad will, there's lots of things that there's always going to be something that you didn't think of, and you don't want to have to necessarily sell something when it's on the downslide. So, so have that cash. And with the interest rates up, it's not that painful to have, some cash set aside. I think I saw with Fidelity 9-month CD at 5%. It's not bad for a little savings.
Speaking of CDs, someone did a seminar a couple of months ago on retiring. And you know how when the market is low, it's a painful time to have to withdraw from your
Right.
retirement account. So they had figured out how much money they needed to withdraw from their retirement account every year. And they put that money aside in what they call leveled CDs, which meant, say if the amount is $20,000. So they put $20,000 that was going to mature in 5 years, $20,000 that was going to mature in 4 years, $20,000 that was going to mature in 3 years. So they're pulling out $20,000 plus whatever money they've interest, and they're not pulling money out of their retirement account.
Yeah.
To help cover those years when the stock market is down. And I just thought it was a really interesting idea.
Yeah.
Yeah.
And again, that's one of the benefits of being exposed to this group of people, because different people have different ideas and they share them.
Yep.
Something you would never think of. I would never thought of that on my own unless
No.
I'd read it
Yeah.
somewhere or heard somebody talk about it. So you're not withdrawing from your retirement account other than the minimum that you have to withdraw every year. But here you have this money that's matured.
So one of our clients actually said that their $4,000 a month financial advisor gave them that advice. So that was good advice, but then fire them. Because $4,000,
They
I mean, like
have a whole lot of
$4,000,
money to be paying somebody $4,000 to manage it. Oh my God!
right? When you could have gone to a better investing meeting and got that same advice for free, or
That's a lot of
for the
money.
$120 or whatever it is for the annual. It's a nonprofit, you guys, so it's not like they're trying to make money on this thing. They just need to keep the lights on. My grade school has a stock market club. It was a group of white middle school aged boys. I wondered what they were doing because they often won competitions. Never too old, never too young. Not in my middle school or elementary school, or maybe at my high school.
But what a great idea.
Yeah.
Excellent idea. These people talking about Coke and Pepsi. Okay. So I'm way behind. Let's see. I'm looking for the cues, you guys. Um, I don't know if she wants this.
Thank you. I work for a company called Saban Films.
um,
Uh,
so you look young, girl. Um, yeah, she does. But
I'm on Facebook. If you know what my name is, it's not a secret. You can find out all about me. I'm on LinkedIn, so may as well claim it.
yeah, that's true. And Sabani's a sweetheart. But um and black don't crack is not her only beauty secret. You got to take care of yourself too. So that's part of it as well. And part of it is not being stressed out about money because you've done what you need to do to make sure that future you is going to be okay. So, because stress, y'all, it will take you out. It will take you out. Okay. I don't know how far behind I am. I just started day trading this year. Ooh, my goal is to do it full time. Okay. It takes a lot of educating yourself
Yeah.
constantly.
Day trading is
That's
not
a
easy.
job. And I'm not trying to get another job.
The
But
other thing I want to share, since so many of you are talking about moving overseas, my moving overseas adventure did not work out. I had to come back because I had to. I had kids in college, and I couldn't work in South Africa because they wanted to hire South Africans, and it was a very, very difficult time financially. So part of my commitment to learning and growing was I didn't want to be in that place again. So I was really motivated to learn and not make mistakes. And one of the things was cutting back very, very hard on spending. I mean, I would walk to the grocery store like 2 blocks to save gas, or I would um, not just run back and forth to the store. If I had to go to Costco, if I had to go to the grocery store, if I had to drive from say Burbank over to Los Angeles, I made sure I made a plan and I did everything I did on that side of the hill before I came back. So it's like thinking about every single thing you can do to reduce your expenses. And in that reduction of expenses, figure out 10, 20, $30 that you can save and put in the stock market that will benefit you later.
yeah, yeah. And we really can. You know, I'll put it this way. Once you figure out that this thing is doable for you, it doesn't feel like a sacrifice. Like not buying those Jimmy Choo shoes. I couldn't care less today. I could not care less. Even though someone who was really into shoes helped get me into shoes, who we're talking to right now. But now the shoe fascination has turned over to stock fascination and other investments.
I told
Um,
Alicia during one of our calls, I was at the mall, and I'm rarely at the mall because I just don't go to the mall anymore. But I'd gone to the mall to do something, and I went to Starbucks, giving myself a rare treat. And the girl in front of me had a Tory Burch bag. She had a Coach bag, like shopping bag. She had been shopping, Gap, whatever. And she went to swipe her card, and it wouldn't go through to buy a cup of coffee. And I
Hmm.
thought to myself, wow, what if she were investing that money? So look at your spending, cut back. You will not be sorry.
one thing about Europe is, at least when you live in the city and not on some farmhouse, is you only have so much space for stuff. Like, I can't have a bunch of purses and stuff. Where am I going to put them? There's just not enough room. And so if I buy something, that means something else has to go away. So, so yeah. Is the model club a part of better investing clubs?
Yes, it is.
Yeah.
And
Hey,
we'll include
Alex.
that link as well, Halisi.
Yeah, 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 yeah. So good to see you in the chat. Greta asks, you have mentioned you're still working. Are you planning on retiring in Portugal?
No,
Because Greta is.
no. I what I found, I'll share with you what I found. When I moved to South Africa in 1998, there were a lot of Americans living in South Africa. They were like home. This was it. This was wonderful. There was a nice sized community, but as we got older and our parents got older, we found that we had to come home and take care of parents and take care of things in the United States. We didn't have the technology that you have now with the ability to communicate with parents by FaceTime. So most of the people that moved to South Africa in the 90s and 2000 are no longer here. They eventually came back home for healthcare. But we didn't have the same plan that you guys. You all are being very planful about what you're doing, about moving and living overseas.
Yeah.
Most of the people that went with the company. They were people with Coca-Cola and McDonald's. They were working for companies, loved it, and wanted to stay. But you have to figure out a way to make sure you either have enough income or you're generating income where you are. The other thing is like, do not, and I said this in the last seminar, put all your money in the currency of the country where you are. At this point, the US dollar is stable. Now, what's going on with China and whether or not they're going off the dollar, that's yet to be seen. But do not take your money and like move it to another country. I'll give you an example. When we moved to South Africa, the dollar to the rand was $6.95. It was 18 last month, and I think it's 17.99 right now. So if your dollar was sitting over in a bank in South Africa, it would have depreciated.
Mhm.
So
Yeah. And then the other thing is you do want to maintain an American bank account. So even,
absolutely.
because it just makes life easier. It just makes life easier. And like right now, Rick and I plan to be here for the foreseeable future. That's as of today. We are only temporary residents. Portugal gives out temporary residency, and then you can renew it. And the assumption is, I don't know anybody who didn't get renewed. So the assumption is when we go back 2 years from now, they will renew it again for another 3 years, and then we can get permanent or citizenship. But just in case we decide, it's not going to be Portugal, it's going to be Spain. It's not going to be Spain, it's going to be Mexico or whatever. All of our income is going into our American bank. And then I try to time it. They say don't try to time the market, but I try to time it when I withdraw money when the dollar is either weaker or the euro is weaker, however you want to look at it, where there's more
The
parity.
dollar is stronger.
Because right now, the dollar, right, or
Yeah,
the euro's weaker, right? So however you want to look at it, because right now we're losing 9% every time we move money.
So Halisi, let me ask you a question because this is a follow-up to that question was I came home, I owned a home I actually owned several homes in South Africa. But now I am so settled back in the United States, I'm not at this point in my life going to go back and start all over again in South Africa because my children are here, my grandchildren are here. I do have a child still living in South Africa, and I go and visit, long visits, 3-4 weeks a month, something like that. What's the long range plan based on what your group is talking about in terms of, because that was the challenge for us, the
Yeah.
long range plan of getting older, needing to be
Yeah.
closer to your children,
Oh, yeah.
needing support
Yeah.
as you got older.
And that's definitely something that folks should think about. Because here in Portugal, yes, there is universal health care, but the idea of long-term care in nursing homes is not a thing here. Because you have generations that live together or grandma moves in with the kids, et cetera, et cetera. That's what they do here. However, what you should build into your budget is money to hire people to come in. So when you move to a place where wages are lower than what they are in your home country, then it's easier to build that in. For instance, I'm not comparing the two, but The person who comes and cleans our house charges €8 per hour.
I have no.
So,
What does that
so
mean?
that means $8.70 per hour. She usually cleans for 3 hours. So I pay her about $26
As opposed to 75 in the United States.
as opposed to 140 in Denver.
Hmm.
140. 140 for the same amount of time. So, so plan accordingly, right? Like have a plan. Have a plan on what you're going to do if you need assistance. Spain has very good senior care options. And so once we're EU citizens, then the whole EU opens up to us. So that too is part of the plan.
Mm-hmm.
So, but yeah. And then the other thing that was not available to Phyllis when she was in South Africa is, okay, oh my God, something happened or whatever. You can always get a job online. If you find that you did not plan well, you can always get a job online get a job in America, making American wages and live someplace where the cost of living is less. How much time each day or per week do you spend choosing managing your stocks? I max 401k, max IRA, have a brokerage account, 5% CDs, and a treasury bond.
I'd say monthly, maybe 15, 20 hours.
Okay.
But I've been
hours a
working
week.
Yeah, but what I'd also say, it's actually probably more, it's probably more than that. I would say 3 or 4 hours a week. But I also would say that I am working to what I call stabilizing my portfolio. I learned along the way about risk. I did buy some of those higher risk stocks and had to get rid of them, etc. So now I've got more stable stocks that I have a pretty good idea projecting where they're going to be in 5 years. So I'll probably do less, but I will be continuing to look for newer stocks and newer stock ideas that have the potential to make those big gains that I like to look for. So, but I enjoy it. I mean, I'd rather do that than, watch a football game or read a novel. So
Yeah.
I'm a little bit different.
Mutual funds versus ETFs versus index funds. So, Sabrina, we're not sure what the question is, but an index fund is a mutual fund. So
It's just not managed.
It's just not managed on a daily basis. And an ETF is like an index fund, except for you get to trade it like a stock. But I'm not sure what your question is. Are you asking, do we have a preference? Do you have a preference? I don't do mutual funds because the fees are too high. I don't
do ETF. I don't do ETFs because I don't understand them.
So
I don't invest in anything I don't understand.
There you go. The one thing about ETFs versus an index fund, for the index funds where you need like $5,000 just to get in, and there's some Vanguard stocks like Vanguard funds like that. Usually the ETFs you can get in for like $100, and it's the same exact bucket of companies in the ETF. It mirrors the index fund. But again, it's traded, minute by minute, just like a regular equity, as opposed to index funds, which are bought at the end of the day. So, or at the beginning of the day, whichever. But just once a day, they decide what that price is. Okay. Let's get through these questions because we are going on 2 hours, y'all. Have you bought gold? Do you, oh, you're putting your headphones in. Do you buy physical gold? Oh, we can't hear you. No. Make sure that you have told. Oh wait, you're muted. Let me. Oh
To
wait.
be unmuted now.
Okay.
There you go.
There we go.
I don't, because I don't buy things that I don't understand, and it wasn't anything I was interested in, so I didn't do the research. But I just decided that wasn't something. And everybody's saying buy gold. I take that back though. Through my investment club, we do have an investment in gold.
Is it in the physical thing?
No, it's in a company. It's in a company
Okay.
that mines gold.
Okay.
So that's one of the advantages of being an investment club. You can have your personal investments, you can have your 401k, you can have your retirement, and then you have your investment club. So it gives you some of the diversity that you should have in your investments.
Great. ICBP, you asked that question again. We got to it, so I'm going to skip it. Do you place stop loss when you place trades?
I haven't ever done that. I do market limits sometimes, like this particular stock that I was talking about that I've been investing in since January, where I call waiting in, which I'm really glad that I did. Say if I'd have taken my pot of money and bought it all when it was 75, but I knew the stock market was kind of going up and down and shaking, and that was before the Silicon Bank thing. So I decided to just go in gradually, which I call waiting. It's like wading in the water, you know, wading in the ocean. And so I've been going in at, say, 75 and 70 and 65. So one day I decided, I wanted to see if it'd go down to $44. So I did I put it in and it went through.
Yeah. There's something else that we were both investing in, and I just bought it at market, and you put it in at a limit, and it did go down to that limit. And it did go down. I don't know why I'm always, it's like, but I want it. I don't know. I have to start being.
Oh, the other thing you could do is, you know, if it's not, you haven't bought it by the end of the day, you can just cancel it and then go on and buy it before the end of the day.
That's true. That's true. Do you play? Okay, we just asked that. I thought I put this up. Any recommendations on how to manage vested restricted stock options when you leave your current employer?
I haven't done a lot of research on that. I haven't had stock options in I don't know how many years. So I'm not really up on that. I really can't comment on that.
I can't either.
You should talk, you know, you can go talk to, first you can do reading and do it that way, but you also can talk to investment managers. They usually don't charge you for the first consultation, or you can go pay somebody to talk to you about these things and just pay them a fee and find out more information.
They have, like, Fidelity and Schwab have people that will talk to you. And the HR person will at least give you what your options are with them. So yeah. Okay. I joined late. Hey, Artwork Insight, welcome. Sorry if this question has already been asked. If I join Better Investing, will this include membership in the Georgia chapter?
Part of it, yes. If you join the Georgia chapter, they will pay part of your membership in Better Investing.
Oh.
If you join a club, the Georgia Investment Club, they will pay part of your membership. They pay your membership. The club pays your membership, and you just have to pay to use the tools on the website.
Oh, I see.
So if you belong to a club, the club pays your membership dues.
Okay. So I just joined Better Investing straight before I started paying attention, to the Rocky Mountain Club. So the in-between, I see your question. You're supposed to put a Q in front of it. Come on now, help me out. Is the digital nomad visa better for taxes than D7? Still considering Portugal, but not Lisbon. Okay. Lisbon is not for everybody. We love it, but it's not for everybody. So visa doesn't have anything to do with taxes. The only thing that I can say is that the digital nomad visa, I believe, is just for a year, and then you have to renew it. So depending upon when you move, you still might be required to pay United States taxes, or, unless you're bopping around from someplace else, right? So you have to be gone from the United States for a certain amount of time, not to be paying taxes in your new country and not the United States. You always, 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 always have to file. If you are a U.S. citizen, you have to file. Just file, okay? It does, but I don't owe, and I didn't make file. You are required to file, but visas have nothing to do with taxes. It is the fact that you are a new tax resident of Portugal that allows you to apply for the non-habitual residence tax status that gives you that discount in taxes. And it doesn't matter what kind of visa you have. If you are a new tax resident, you get to apply for NHR. Okay. But we're having on April 23rd, we're going to have expat taxes person on there to talk about the United States taxes. If you are in the Fire Over 50 group, we are bringing in a Portugal tax person to talk about taxes in Portugal. What is the usual or smallest investment amount that you've made? I think that's what you mean, BP. So what you mean, the least amount that she has invested in a company? Are you willing to give that information?
I own one share of Snow.
What's Snow?
It's a data lake company. I think it's
Okay.
an interesting concept, but then I found out Microsoft has data lakes, so it's like something
Are you wading in the water?
no, I'm not quite waiting yet. I'm deciding whether to sell it or whatever, keep it, or I need to do further research.
Yeah. Yeah.
But I mean, there's a stock that I was buying. I think it was A2 Milk. I bought A2 Milk, and it was like $5 or $6. So I bought small stocks, and I didn't consider that a penny stock because there was data on it. Right. And if I'd have held on to it longer, it might be doing something now. I don't know. I sold it because I don't know if you're familiar. You know, the A2 Milk, you see the A and the 2 on the milk thing.
Yeah.
And it's these cows that don't have lactose.
Right.
But now everybody has lactose milk. So the stock went down.
Yeah.
It was a great idea, but it didn't have what they call, it didn't have a moat around it. Other people could duplicate it.
Yeah. The barrier.
It had a narrow moat.
Low. Exactly.
Right. So its value was eroded.
And some of that you guys can look up on Morningstar, but Schwab also has Morningstar reports.
Also your library.
Yes. So our attorney has good video on ETFs versus index funds. Yes, I had the same question a few years ago. Thank you, LXNC. Yes, they do. Disregard my earlier question. I found the answer. Okay, but we probably didn't. We probably already did it. Oh, we've gotten through all the questions. Yes, we caught up. Very good. I declare bankruptcy. Wait, what? Huh? What are we doing, Michael? What are we doing? Why are we declaring bankruptcy? I don't know. It's not a question. So, I don't know. Anyway, I think we have done it. Did you invest $1,000 or $100? So BP, I think I told you guys, I kind of told a little bit of her business, but that she started off with 4,000 way, way, way back in the day. But you don't need that much to start out. You can start with $100, and then a little more, and then a little more, and then a little more. The barriers to entry on investing are just not what they used to be. And so if all you have is 100, start there.
If all you have is the raise that you made,
Start there. The difference between, the 2000 you get now, you get in 2020, invest the 20.
Somebody had a question about CashApp.
CashApp, where was that?
About investing in stock on CashApp.
I hear people do that and buy Bitcoin on
Yeah,
Cash App.
you can use the apps. You're buying stock. It's legitimate. They couldn't just sell you stocks if they weren't being regulated and stuff. So Cash App is good. I have stock on Robinhood and a couple
I
others.
mean, yeah, I say keep it simple, Auntie Trey.
Yeah,
you don't want to be going, you here, you there, because you already talked about you have a Fidelity account, and now Cash App, and then Robinhood, and this and that, and you're looking here and there and here and there. That doesn't sound like soft life. That does not sound like a life of ease, right? So, I would say keep it simple. If you think that buying stock on Cash App will allow you to, like, like Acorn, all your spare change gets invested, and so every time you buy something, what's left over to average out.
Right.
If you think you need that kind of discipline, then okay. But otherwise, keep it simple. Don't make it harder on yourself.
Auntie Trey, I think it's simpler to keep everything in as fewer places as possible to look for it. And to have things in Fidelity and Cash App and all these different places, it's like you can forget it's over there. So simplify your life.
Exactly.
Especially at retirement age, you need to make it simple, because you never know when your life is going to change and you're less able to manage it, or you have a hip replacement and you're up, retired. I mean, sitting recovering for 6 weeks, and somebody is helping you and they don't know where to look.
Yeah, exactly. Keep it simple. I know you're a vacarian, Auntie Trey, so you know how we do. I work in a library. Always check out the library. We are invested in your knowledge and well-being. Thank you, Jeanette. I here in Portugal still use I have 3 library cards from the United States, 2 from Denver, and I have LA. And when I go back, I'm going to go down and get Orange County. So, right? The library is invaluable. People sleep it. Does anyone invest Bank Fidelity overseas? So,
is there a Fidelity Bank overseas?
So no, I don't know that there is a Fidelity over here. And when you log in, and you don't have your VPN on, you do get a message, BP. But yeah, we have money in our Fidelity Bank account, and we can manage stuff in our Fidelity account from over here. But I haven't seen any like brick and mortar over here. What platform do you use to buy and sell stocks? So, I personally, Raquel, suggest that you use a platform that has their own index funds. If you're going to do index funds, that have their own index funds, their own branded index funds, because those are the ones that you're going to pay the least amount of fees on. So if you're going to go the easy route and do the index funds, then Vanguard, Fidelity, Schwab, like that. Because if you're at TD Ameritrade and you want to buy an index fund, does TD Ameritrade have an index fund? Maybe not. And that means you're going to be paying extra fees to buy a Vanguard fund, or to buy a Schwab fund, or to buy a Fidelity fund. Also look at the services that they offer, right? Especially if you're going to live abroad, look at the services that they offer and the user friendliness, and any fees that they charge.
And also read the reviews of customer satisfaction and the things that customers say. Just like if you're buying a product on Amazon and you read the reviews, look at Fidelity, look at Schwab, look at TD Ameritrade, and read the reviews, and spend time on the websites.
Yeah.
Because a lot of them will give you access to explore and look around.
The thing that bugs me about Robinhood, Auntie Trey, is it seems to be gamifying. There's like a gamification of their app. And I think it needs to be taken more seriously than that. Now, that could just be my own prejudices, but that's what it feels like to me. And I don't see the same amount of analyzation tools on the Robinhood app and website as I do on the big boys.
It's starting to grow up more. I will give it that, because when it came out, it was for to bring younger investments in, and of course, in order to get the best way to get younger investors is make a game out of it. It's simple, and easy. But now they're trying to reach out more, a little bit
to
more
serious
to
investors.
more serious stuff. They're trying to do like the matching 401k type thing. They're taking their time, but they're branching out. But go with the big guys. Go with the big guys for your serious investments.
I have not been. I love the customer service of Schwab and Fidelity. I love it. They are on point, always sweet, always giving as much information as I need. I prefer the user interface of Fidelity before Schwab. It's much better. That's my personal opinion.
I agree with that.
And then there was something else. So yeah. I mean, use Fidelity. I hear Schwab all the time. Right. So both have banking arms. Both will refund the ATM fees and the conversion rate fees or whatever for taking money out overseas. So if that's what you are asking about, both of them do that.
Does Fidelity have a maximum? Because Schwab has a maximum
that you can put in their bank account?
Withdraw monthly.
Oh, I don't know. Whatever it is, I never hit it.
Okay.
And I never hit it with Schwab either. Because we don't live on a lot. We don't live on a lot. Okay, you just found, I thought you guys were finished with the questions now. Does anyone have Charles Schwab bank account? Yes, we do.
I do also.
And yeah, I mean, great customer service. That's all I can say. And I'm able to take out money here. I never see I look too. I never see fees. I see them come out and then I see them go back in is what I see. I think Schwab did buy TD Ameritrade, but I still think that they're operating as separate companies.
Charles Schwab was the first really friendly, encouraging individual investor firm.
Right.
There was a time where to get into Fidelity, you had to have a minimum of $250,000. Now you can open a Fidelity account with nothing and not even fund it right away, which was shocking to me.
Yeah.
And as a result, I must say I have an affection for Schwab because they were so encouraging. Any little money you put in, they were really, really encouraging. And that's where I did all my initial investing. But there are a lot of advantages to Fidelity, and one is that it's the site is just a better site. Yeah. Charles is Schwab, and their fractional shares are easier than Schwab's.
Yes, and they have more
research.
Do they have more research?
I think so.
Okay. They also have more opportunities for different fractional shares. So they have a bigger variety of things that are offered with fractional shares as opposed to Schwab, which has less. Mm-hmm. So what is the maximum Schwab? I'm not sure what the question is.
I don't think there's a maximum.
A maximum that you can invest at Schwab, or the maximum you can withdraw from a Schwab checking account? What are we talking about, BP? I don't know if Ally charges fees, but I would say so. Their fees to wire money it's $15. I don't know if that's good or not. That's where some of our money is, and so it's $15. We didn't choose Vanguard because they don't have a banking arm. That's why we didn't. And you chose Schwab because that was the only one that you could get into without coming out of $250,000,
which I
but
didn't have at the time.
right. Um, so, but is there any reason why you haven't tried Vanguard since then?
The same advice I gave your aunt was, I don't have any reason to go to Vanguard. I'm happy with Fidelity. I'm happy with Schwab. I did try TD Ameritrade, and I have a few shares over there. And I'm there because of the access to the research.
Said there's something to be said for that. So Elle, you love TD Ameritrade. So I looked at TD Ameritrade, E-Trade, Robinhood, and one other one that you were on.
We still have
Yeah,
a little bit of money in them.
I know.
Yeah.
I need to consolidate.
Weeble,
right? Where they do the pie thing and all this stuff.
oh, that's M1.
Oh, is that M1?
M1
Okay.
Finance.
Boy, you guys have a lot going on.
No, I don't.
They're small amounts though.
I think it all adds up to maybe $1,000 originally.
A little bit more than that.
Oh, what you ain't telling me?
$1,001.
Okay. All right. So, but in any event, I just personally, I like to keep it simple. I find the stuff that I need between those two and better investing, and then my library or Morningstar and all of that. And so yeah.
It's a lot. If you really get actively involved in doing all this, it becomes a lot. So you need to simplify.
It does. It does. And we're about that simple life. I mean, if you're into this, if you are really into this and this is how you want to spend your free time, then great. Know that Rick is in trouble when we finish.
I'm good.
Know that if you want to invest in individual stock, that there is more risk than just putting your money into an index fund, like a total stock market or S&P 500 index fund. You really need to make sure that you have diversity in your portfolio. You need to make sure that you are taking the time on a regular basis, like once a week, to look at what's going on so that you're not caught off guard. Maybe once every other week, but you don't want to be caught off guard if you've got the majority of your money in individual stock. So this is kind of 201, 301 when it comes to investing, and we consider index funds like 101. Think or swim. So yeah. Anyway, thank you so much for coming back, Phyllis, and
I enjoyed it.
Giving us all of this information. Go ahead.
The other thing I'd like to add is, before the pandemic, most clubs met in person. Now most clubs are online, just like this. Sharing information.
And so there's an opportunity, like, I tune in from time to time to the Rocky Mountain chapter, and I need to probably be more active, but maybe it's going to be the Georgia chapter or Atlanta chapter. I don't know. And, because there's only so many hours in a day. But, there has never been an opportunity to have access to information as there is today. So definitely take advantage of it. And the only way to really get to financial freedom is to invest. Whether you invest in real estate or whether you invest in the stock market, you have to invest. You cannot work your way or save your way to financial freedom. It's just not going to work. I suppose if you're making $500,000 a year and living off of $65,000 a year, then yes, you probably could save your way. But then it's not going to grow, and you're going to have it in a savings account at 3.5% interest, and inflation is 7%. So then there's that, right? So you want to at least be able to keep up with inflation. A lot of getting the confidence to start investing is contained within our course, Beyond the Bling, We got to get beyond the bling. Money Mindset Makeover for Financial Independence. That information is below. Y'all know we're having a meetup in a few weeks. We're going to see a lot of you guys.
Right around the corner.
Early bird ticket pricing is almost over. So if you want to get the lower price, definitely that information is below. We have an amazing program and amazing food. So we did get the place that's right off of one of the main squares in the tourist area, Black-owned business. Really happy about that. We're going to have some culture, some history, some dance, some food, some drinks, y'all. He's making up a special concoction just for us. So April 26th is that meetup. June 20th is the next meetup. The week after Labor Day is our Move to Portugal Summit, so stay tuned for that. And with that, we will let y'all go. If you have more questions, you know you can book a call with us, support the channel, hit that like button, and please subscribe.
Subscribe.
Yes. So we'll see you next week.
See ya.
Bye.
I'm not returning to the States, Professor, ever. No.
I didn't think I was returning either. I really didn't.
We'll be back in the summer. Bye.
Okay.